We're watching the Fed closely. The Fed continues to say it will keep rates low as the economy recovers. So what about the investment options for your portfolio? What should you do with your cash? Hilary Kramer is with us, founder, chief investment officer, Kramer Capital Research. Love when you're on because I know you have so many ideas for us. It's tough because the low-hanging fruit has been picked, right? At this point, markets are near record highs. I know we've had a little bit of a pullback this week, but what's your take on the markets and where we go from here?
Well, Nicole, I think it's going to go back to trying to find yield, trying to find companies that haven't yet been outstretched and overstretched. So many times I've been on and I've talked about companies like Olin at $17 that's now at $40, or Big Lots, at 10 that's now at 62. But there's always new companies ahead. So what we're putting our subscribers and clients into are the dividend yielding stocks that have upside and have actual growth potential. So, for example, we're looking at PSA, Public Storage, the largest self-storage company. It's a REIT, a 2.9% dividend yield. It matches perfectly, just dovetails with the baby boomers, as well as all of the 20-somethings and 30-somethings, even with their children, moving back home at record numbers. So that makes a lot of sense. We love a stock we discovered, Kronos, KRO. That's titanium dioxide pigment. And there we like a 4.3% dividend yield. And that titanium dioxide is used in plastics, it's used in paints, it's used in cosmetics. So that's a good one. Safety insurance, another one that hasn't yet been found. The market will find these and then they'll go up, and that's when you should be selling. But safety insurance, SAFT, 97% of its business is automobile insurance in Massachusetts. And they're, 4.2%, you can't. That's a great one as well. Definitely upside to the stock itself. And Monmouth Realty, MNR, has a 4% dividend yield. And this is a real estate investment trust that is buying large warehouses very close to hubs that companies like Amazon are located, where they're located. And even now, even though, look, we love Goldman Sachs at $220, at $330, we still think it's a great company. And the stock could go to $390 and still only be at 1.5 times book value. And you have a 1.5% dividend yield. We love Novo Nordisk, NVO, for anyone who wants European and international exposure. Pharmaceutical company, really strong in the diabetes space, really high tech. They're ahead of the curve. And then I'll always throw in Scott's Miracle Grow. I have to, especially even though there's only a 1.1% dividend yield, but it's not just gardening that people are going to it for. Look, there's a lot of cannabis being grown all over this country.
And that's your exception, because you said don't buy anything with yields less than 2%, but you do make an exception for a name like that. Wow, stocks. I love your big list of stocks. How many stocks do you hold? 20, 30, 50? I know you also have some more. Tell me.
17 is the magic number. The Jeremy Siegel, who I studied under and I was a TA for at Wharton many years ago, we came up with that number, 17. That was our project. So that seems to be, so we try to always rotate out. Of course, the problem with rotating out is that we lose a lot of the upside. So we're exiting Mercado Libre at $60 when we have a double, and then it goes to $1,000. And that's just the way this market works. The good news is so many of our clients know that I sell way too early.
Right. And, I definitely see your themes. You like something with dividend yields because you're not getting any from treasuries. You just named, almost 10 names right there. I see a trend in health, right? Names like Bristol Myers, Pfizer. I think those are some of the names you like. Some of the food stocks, General Mills and Kraft Heinz. Tech, I see Qualcomm, and then I also see some IPOs, Roblox, Coin, and then there's PayPal and Square. Now, are these all picks or things that you're watching?
The pharmaceutical companies those are in our portfolio. We especially like Bristol Myers Squibb. We think BMY could definitely be between $80 and $90 stock within the next 12 months. Look at Johnson & Johnson. I mean, I know they just reported earnings, but the stock and the fact that it's going up tells it all. Sanofi, largest vaccine distributor in the world, and the vaccines in every area. Pfizer, of course, one of our favorites. And in terms of the new IPO companies, let me talk about Roblox, for example, and Bumble, Coinbase. We have those companies are coming down slightly from their high. They're not doing a typical double and triple like we've seen with the snowflakes before. A lot of that is that the money's getting onto the sidelines. There's a lot of skittishness and nervousness. And some of these IPOs could be really big winners for tomorrow, like Roblox. We think that Roblox is like digital Disneyland. It really is in terms of the users, and there's a lot of hesitancy. The concern is that it's the under 18-year-old crowd that's using Roblox, but there's so many more people than that use Roblox. It's the apps that let you do turnkey gaming. So we think that's great. We think that there could be some upside with Bumble still, BNBL, if they can really transform and do their story right, which is to be more than online dating and to be a sort of a LinkedIn in many ways. So we see some potential there for sure.
Thank you, Hilary. We really appreciate it. Hilary Kramer, 17 is the lucky number, founder, Chief Investment Officer, Kramer Capital Research. Thank you.